On a crisp morning in mid-January 2026, traders in Amsterdam weren't expecting what came next. As the bell rang, something remarkable happened. The stock of a Dutch technology firm leapt, driving its market capitalization beyond the symbolic $500 billion mark, a feat few European companies have ever achieved. That company, ASML Holding NV, is not a household name in every living room, but inside the world of chip manufacturing, it is nothing short of legendary. ASML doesn't make the chips themselves. It builds the extraordinarily complex machines that make the most advanced chips possible. Its extreme ultraviolet, EUV, lithography systems are essential tools in the race to produce faster, more powerful semiconductors. For years, ASML was a quiet titan of the semiconductor supply chain. Engineers in Veldhoven, Netherlands, perfected machines that carve microscopic patterns into silicon wafers, patterns that end up in every modern smartphone, AI accelerator, and supercomputer. But unlike consumer tech brands, ASML's breakthrough was a gradual accumulation of technological dominance, not flashy product launches. Today, its valuation reflects that quiet mastery. The immediate spark for this surge came from an upbeat outlook by TSMC, Taiwan's semiconductor manufacturing company, ASML's largest and most influential customer. TSMC announced plans for significantly higher capital investment in 2026, signaling that chipmakers worldwide aren't just dreaming of an AI future, they're building it now. Reaching $500 billion in market value is more than a milestone. It's a story of how technological necessity can reshape markets. In an era driven by artificial intelligence and data-hungry applications, chipmakers are investing with new urgency. That means more factories, more advanced nodes, and, crucially, more of ASML's machines. Here's where the story gets interesting. This milestone was hit even as geopolitical tensions and export controls remain intense. ASML's revenue from China, once nearly half, has shrunk due to restrictions on advanced equipment. Yet the company's valuation has soared because Western and allied demand has surged. In other words, the global pivot towards AI has, so far, neutralized the impact of lost sales in one of the world's largest markets. But this celebration conceals a contradiction. The forces that propel ASML forward also impose limits. Today, the company announced record profits for 2025, powered by AI-related demand, but also plans to cut about 1,700 jobs, largely to streamline operations and emphasize innovation. This reveals a deeper truth about modern tech giants. Growth and efficiency can coexist uneasily. ASML isn't trimming because business is weak. It is adjusting to thrive more nimbly. In the high-stakes world of semiconductor equipment, engineering excellence must be paired with lean processes, and this shift may signal a new phase in ASML's evolution. So, what does this story tell us about the future? First, technology infrastructure, the invisible backbone of our digital world, is finally being valued as such by markets. ASML's valuation surge isn't just about a stock price. It's a recognition that the machines behind chips are as critical as the chips themselves. Second, ASML's journey highlights how geopolitical tensions and innovation cycles can intertwine. Even with export limits and a reshaped customer base, the company's growth underscores the resilience of industries anchored to global demand for AI and computing power. And lastly, there's a lesson for investors and tech watchers alike. Dominance in an indispensable niche can be more durable than dominance in a broad consumer arena. ASML's engines aren't powered by gadgets. They're powered by the relentless pursuit of more capable silicon. In a world racing toward AI-enabled futures, ASML's story is not just about reaching $500 billion. It's about proving that foundational technologies, the rare machines that make the digital breakthroughs possible, are finally stepping into the spotlight they deserve.